What's up, everybody? My name is Joe Brown and this is Heresy Financial. I watch a broad range of indicators on the market. There's no one size fits all approach and there's no magic formula, there's no crystal ball, and so I try and keep my eyes open to look at what's going on out there, mainly so that I can pass that along to you because I believe that financial education is something that becomes more valuable the wider it's spread. And if you've been around the channel for any length of time, you know that I've been bullish on stocks since I think it was about April of 2020, it might have been May of 2020. But I've started to notice a pileup of sell signals that have started to get my attention. And so today we are going to look at each one of these sell signals that I'm watching. And then we're also going to look at counter arguments, kind of the devil's advocate, really buy signals. And then I'll tell you what I'm doing with this information right now. Ready? Let's dive in. All right, the first sell signal that I'm looking at is IPOs. So let's take a look at this chart from stockanalysis.com. You can see here, I'm zoomed in a little bit here so that you can't see this year yet. We're looking at 2000 to 2020. Now, clearly 2000, that was a big year. 397 IPOs happened in that year. And we did not break that record until 2020. We had 480 IPOs happen last year. Now, this isn't included on the chart, but we have to take a look at 1999. We can see that year had 547 IPOs. Huge record. Now let's take a look at 2021. We are at 538 and it's only June. Yes, that is correct. We are on pace to double 1999, and we all know what followed that. Now, just because you have a large number of IPOs, that doesn't mean you're going to have a stock market crash. It's really the mechanics behind it that shows some of the correlation there. And mainly when you have an excess of money enter a system, that money looks for yield. And so when you have easy money, easy credit, monetary expansion, you tend to have lots of new businesses started, lots of IPOs, lots of investment in businesses that would not have been able to get going were it not for that frothy environment. And if we know anything about artificial booms, we know that a boom, once it has set in, makes the bust inevitable. It's not a question of if, it's a question of when. Okay, so that's sell signal number one. Sell signal number two, margin debt. Look at this chart. This is just a beautiful chart posted by @NorthmanTrader on Twitter. Thank you, Glenn, for the tag. And we can see here a couple of things. Okay, the blue line is the S&P 500, and then the red areas are going to show you how much margin debt is being used in the market right now. Now, obviously, we can see here margin debt right now is absolutely crazy compared to the past. One thing we have to keep in mind is that this is it's sort of relative here because we have to look at that in light of the market cap. And so you'd expect as the market cap of the index goes up that the dollar amount of margin being used on average will go up, even though relative to the actual market cap, it might not be as extreme. In either case, though, look at each major top of the market. You can see it's punctuated by a corresponding major top in margin debt. So why is this? Well, basically it just means that buyers have bought. And not only have buyers bought with their cash, the buyers have bought with their cash plus some. Anybody who is gonna buy has bought. This leaves only potential sellers to come into the market because everybody who has bought and then some. Said another way, the bulls have simply run out of ammo when margin debt gets this high. It happened in 2000, it happened in 2007, it happened before the COVID crash last year, and it looks like it is happening again. Okay, so what is the next sell signal? The next sell signal is basically who's the one buying here right now? If we take a look at this chart by Sentiment Trader, we can see that the small speculative positions in the stock market have skyrocketed to all-time highs. This means that the people buying right now are the retail investors. That's the small investors. In fact, small investors set a record last month at 34 billion net long in equity index futures compared to the previous record, which was set all the way back in 2001, which was 31 billion. Now, usually, the small investors don't nail the beginning of cycles. Usually they nail the end of it. They're the ones buying as all the insiders are selling. All right, what is the next sell signal? This one is a technical signal from Dow Theory. Dow Theory is actually the oldest technical trading system there is. And there's some details that I'm going to be skipping here, but basically you start off with an uptrend. And then in this uptrend, if you are looking for a reversal, you'd be looking for a couple things to happen. The first thing is an all-time high, okay? Simple enough. Then we would see a pullback. After that pullback, you'd see another rally, but that rally specifically doesn't make another all-time high. And after that rally, you have another pullback that declines to a point that is lower than the previous pullback. And this would indicate a reversal that the uptrend is over and now you're entering a downtrend. If we take a look at the Dow, you can see this is exactly what has happened. We saw an all-time high and then a pullback. We saw a rebound, but we didn't set a new high. That was a lower high. And then another pullback to a lower low. And in case you're thinking this kind of thing must happen all the time, this is the first time this signal has come up in the last year. And then finally, the final sell signal that I'm looking at right now is liquidity being drained from the financial system. And I made an entire video about this yesterday. It's on the reverse repo facility at the Federal Reserve. You can take a look at that video here. But essentially, when liquidity is drained and pulled out of a system too quickly, it can trigger a liquidity shock. And in liquidity shocks, people don't sell what they want, they sell what they can. So these are the sell signals that I'm watching right now, and they're coming from all corners of market analysis. So what are the counterpoints to this? If I was playing devil's advocate, what are the counter arguments? Well, number one, the NASDAQ and tech stocks themselves look unbelievably strong right now. And so we have some really great momentum, at least with tech stocks. Number two, we've got monthly stimmy checks starting next month. The majority of American households next month are going to start getting checks from the government in the form of child tax credit checks. This will introduce new buying power into the system. Number three, it's basically not possible to consistently nail the top or the bottom unless it's blind luck. Number four, bull markets end on euphoria and blow off tops, they don't end of old age, which means that number five, selling now and going all to cash means that if a crash or a correction is coming, and that's an if, not a guaranteed, it means at the very least you're missing up on that final massive leg up, that blow off top, that euphoria. And again, that's even if a correction's coming after that. And if not, you're wrong, you just missed out on all those gains. And then finally, number six, stocks always look expensive during episodes of high inflation and in countries and periods of hyperinflation, but it's more of a function of people dumping the currency to get their hands on assets that will stick around and eventually be repriced into new currency, regardless of what the valuations are and regardless of what the price is in the hyperinflating currency. And so overvalued stocks can simply just be a function of the currency losing its purchasing power extremely quickly rather than the stock market itself being in a bubble. So in light of all this information, am I certain that a stock market correction is around the corner? Absolutely not. And that's personally why I don't like to sit around in cash. Cash flow is king, but cash is trash. So that's why I like the approach of just hedging. It's relatively simple to employ a tail hedging strategy once you know what you're doing. Some deep out of the money puts a few months out, rolling them out every single time before the theta curve gets too steep. And if you have no idea what language I was just speaking, it's probably time to take one of my options courses. I've got options courses for beginners and advanced linked in the description below. So in summary, we are starting to see sell signals pile up from all different corners of market analysis. IPOs are going insane and they're right now set to double the previous record, which was 1999. Margin debt is at an all-time high, meaning that all the money that can buy has bought and then some. Number three, those who are buying are the small money, aka the dumb money. Number four, the oldest technical trading system in existence, Dow theory, has just triggered its first sell signal in a year. Number five, the Federal Reserve is actively draining reserves from the financial system, draining cash from the financial system at a terrifyingly quick pace, threatening a liquidity shock. Now, nothing is guaranteed, and that's why I go both ways. Long and short, that is. If markets go up, I win. If markets crash, I also win. If markets go sideways, I just collect my dividends along the way. As always, thank you so much for watching. Have a great day.